Good afternoon, traders. This is FreeFX, your source of free education for the Forex markets. So for the trading video for today, the 23rd of July 2015, I'm going to look at the currency pair Great British Pound and New Zealand Dollar, GBP NZD. What happened in the last 24 hours was that the RBNZ has cut the interest rate from 3.25% down to 3%. This, from the Bloomberg poll of economists, was widely expected. 18 out of 19 had said they would expect the Governor Wheeler rate cut to occur, and indeed it came to pass. But where does that leave us, the retail traders, who are wanting to take our profit from this continued bull trend that we've had for 12 consecutive weeks, and with a slight pause last week, and then we were all set for further gains should the markets have reacted in the way that we possibly had expected. Unfortunately, the outcome is not as clear as one may think to begin with. In the first 5 minutes of the rate announcement, the pound New Zealand dollar dropped 425 pips. Okay, a lot of this was retraced within the same 5 minutes following the announcement, and after that we had further drops. Okay, so the recoveries that had been somehow evident through the day leading up to the rate cut were swallowed up completely by the overnight movement. So price action is looking dubious of continuing down at the moment, although it seems that we have not actually truly broken from what is increasingly a clear trend. And this trend I've highlighted here as a channel. You can see that when we started on this journey back in late April, beginning of May, we had expectations of this continuing, but it essentially took a very rapid descent, and every time it tested the bottom and the top of the channel, it made a sort of sideways or slow movement. And this time we've seen a very rapid downward movement from near top conditions in the channel to its floor. So it's quite clear that there are some concerns that this rapid move could coincide with the break of the offset channel, but what we're looking at the moment is to see whether the fundamentals actually back that up. And for that, I think there's no better way to put it than to look at the Royal Bank of New Zealand's actual wording. And this came out with the highlighted section in the statement, which says that further depreciation is necessary for the New Zealand dollar, and the weakness in export commodity prices has been hurt by the New Zealand dollar US dollar exchange rate. In the June meeting, there was an impressive response from the markets, and one of the journalists during the Governor Wheeler press conference said, Governor, the Kiwi US dollar has dropped about 2% after the announcement today. Do you think that is sufficient? And of course, his reply was that the markets would decide on that. So, but certainly there's no clear indication that the RBNZ is hoping to raise rates or for the exchange rate to rise. So we have a clear indication of a dovish view, and we had a rate cut to back that up, and there is expectation of a further rate cut later this year. However, we see that the market has dropped the pound Kiwi and also has boosted the Kiwi dollar. But what we don't actually have is a signal that we truly have broken trend, because looking at this technical view, well, if you didn't know how to draw lines, well, this would be the perfect schooling, because clearly joining the dots, you can see how clear-cut the situation is. And indeed, we can add one further level join, which is just this, what we had in the past few hours. And the 4-hour chart is useful only to see exactly where we are with this, because we don't have a breakdown that's actually continued. And this is significant because it's indicative of an exhaustion of this downturn. Okay, so the floor is actually holding. Don't be worried about this, breaking the line, because it's happened before and we've recovered. So I would look at this and actually wait. So we don't jump into it, and we wait to see what may continue. If we wanted some guidance from the point of view of the sterling situation, well, the cable, the pound and US dollar haven't actually had a dramatic move. So this has been really stirred by the New Zealand dollar upcoming event risk rather than the cable. As you can see, the anemic movement here, the fading real volume, all seem to point towards a lack of volatility for this pair, and the average true range that you can see dropping is also an indication of this true lack of event stacking up to boost the pound. However, not all is lost for Kiwi shorts, because the Kiwi dollar indeed is in a bear trend, and although the 0.65 is a strong round number level which has served as supply about 5 years ago, sorry, as demand about 5 years ago, so this could be a point of going back to higher numbers, high levels. This more recent trend certainly seems to suggest that we haven't broken this particular one, and if you made it into a channel, you could see quite clearly that we're still within the channel. Okay, so if you wanted to add a line to this, you could see that we're still within that. And that seems to suggest to me that there is nothing to fear for Kiwi shorts until we have clear indication that we've broken this top sufficiently, and then we may consider something else. Now, measuring things also helps sometimes, because if we measure this candle here, it's about 120 pips, okay? And the current ATR is about 90, so it is a strong candle, and there's a lot of volume behind it, but it hasn't really had the desired effect of breaking through this. So it's what follows that's important. Will we have an open above today's high or today's close and continue further? If that were the case, then yes, we may start thinking that maybe shorting the Kiwi versus the dollar may not be a wise move. But certainly we may want to reconsider things in terms of the pounds Kiwi should this break actually continue into today and tomorrow. Considering that tomorrow is a Friday and we are well into July and it's summer, so we are now looking at the 29th of this month. So next week we have certainly an important event with the Federal Reserve Bank rate decision, and that will give us possibly some further confirmation of what Yellen and the Federal Reserve intend to do in terms of hiking rates, and this may give us some market movement, possibly in the dollar, which has been stifled around the 120 mark or 12,000 mark, whichever, or 1,200 mark, whichever way you spell it out. But we have to look at the dollar really to see that although there has been some recovery, we've not broken this 12,000 much. We just nudged above it, and there doesn't seem to be a lot of movement. So the markets are waiting for something, possibly the first rate hike itself, to take this to further highs, because at the moment we are into this wedge formation and we have really cornered the dollar into a situation of indecision. And this is not likely to happen to continue forever should the rate hike happen in September as has been forecast. Again, I would say to something like this that having seen what the Royal Bank of New Zealand rate cut has done, which is very little in terms of a continuation of a downtrend, if we have this trend as a likely continuation, and the markets already have used the rate hike forecast from almost a year ago in June 2014 to boost the dollar, and we had waited and waited for the rate hike to come. A whole year had gone past and the rate hike hadn't come. There's nothing saying that when the rate hike finally did occur, that we had a rally in the dollar that would significantly carry the momentum required to take this into new highs. Okay, it may be a rather muted reaction, and so we must really wait and see. However, the situation we have at the moment is really concerning other asset classes, and indeed the equities have been suffering from this threat from the tightening or tapering of quantitative easing that began last year into this year. The S&P 500, one of the major indexes, has almost flatlined around this 21,000 level. Okay. And the UK, the FTSE 100 index, has begun its descent from the 7,100, and we're down just below the 6,700 level. Okay, so the FTSE 100 has already begun its drawback, its descent. The S&P 500 is more resistant to it. The carry currencies like the Kiwi yen have already begun their breakdown. So there are signs out there that this has begun to be a visible, tangible feeling that the party, the incredible bull run that we've had for 6 consecutive years, the lack of interest rate hikes for an equal amount of time, is beginning to turn. And what the markets may want for the US dollar and inversely for equities is a clear official sign from the Fed that the easy money supply to equities, to investors, is coming to an end. And indeed, if we looked at other currency pairs, we can see that this feeling of coming to a crucial mid-year point is coming to coming to fruition in pairs like the euro pound, so that this crucial level 0.70, which goes back a long way, is where we are, and we are beginning to break it. This is the weekly chart showing that last week we went just immediately below it. This week we are sort of in between, below and above. But we have been concerned with the euro situation, and the relief that we've had from the financial crisis surrounding Greece has come potentially to an end, but that is not actually true because it is an ongoing process. So this idea that the pound Kiwi to finish has turned to a downtrend is obviously not decisive, and we can see this continuing with the pound being the other side of the euro, being a currency that has potential to hike. So I would keep an eye on these markets and try to position ourselves correctly for the oncoming week and the Fed decision. Good luck trading out there.